Hello, this is John Kicklighter, Senior Strategist and Global Head of Content for StoneX. I wrote the Q3 and second half outlook for global indices, and it has been a remarkably impressive backdrop to evaluate these markets against. The underlying fundamental themes of the past months were a mixed bag as far as growth, trade, and valuations go, but the volatility we experienced was charged by very potent headlines. We ranged from the US and Iran war on the negative side, all the way to the AI miracle for companies on the positive. As we move into the second half of the year, these open-ended themes have lost some of their influence, but they are far from fully baked in to where the markets could just move on to the next things. I suspect that the best case scenario will take weeks of negotiations for the US and Iran to come to full agreement, and more likely it will involve periods of contentiousness that will worry economic forecasts or even concerns that they'll reclose the Strait. And more likely than not, there's also the capacity for military actions in closure of that strait. Similarly, the AI miracle is probably going to find subsequent waves of support and enthusiasm, given how ambiguous its full implications are for the global economy and how much value can be extracted by the companies and the investors looking to take advantage. Between those two themes, though, there are many other things that could come along, including the outlook for growth expectations, inflation that still lingers from the closure of the Strait, and monetary policy, just to name a few. However, with these themes and as they evolve, I think very important in this calculus is probably going to be the general level of sentiment of the market. If markets are generally optimistic, they will seek out enthusiastic supports. If they are concerned, they will seek for reasons for why their concerns are validated. So sentiment is what we need to be looking at, and seasonality is going to be a big contribution into this. I would say with the move into July, we have the summer doldrums, the start of a consistent decline in volume, volatility, and a general skew to a passive bid on average that we have seen historically through benchmarks like the S&P 500. Now, that doesn't always have to be the case this year, but it is a seasonality effect that many anticipate. It can also lead to surprises that are outside the norm and subsequently throw markets off their games, meaning if the quiet isn't there, it can turn into a more significant unwinding of risk exposure. Now, in terms of the regions, I will be watching the S&P 500 first and foremost from a global perspective. It's just one of the most heavily traded indices in the world through its derivatives, and thereby a great benchmark for risk appetite as much as it is for indices at large as an asset class. But the S&P 500 has some contrasts from the likes of the NASDAQ 100, which is far more tech-oriented. You can also look at the SOX. But then we can also look on the other end of that spectrum for the Dow, the blue chip index. Seeing how these are moving relative to each other can also give us insights into the types and levels of sentiment that we're actually dealing with, whether bullish or bearish, and especially when conditions are generally quiet. In the European markets, I'll be watching for the FTSE 100 and the DAX 40. Both of those for the UK and German economies, respectively, are important conflicts or contrasts for the GDP perspective. And economic activity relative to these asset prices has not always moved in sync. So we want to see how the outlook for Europe and Europe's core financial centers continue to perform in a world that is more difficult when it comes to trade relations. And in APAC, I usually watch the Nikkei 225 as my benchmark, and with the circumstances of monetary policy, as well as the concerns around intervention on behalf of the historically weakened Japanese yen, I think that there still is more interest, again, like the S&P 500, looking at the South Korean KOSPI with its focus on tech and very sensitive AI headline nature, as well as the Shanghai Composite, the engine of the APEC session. So hopefully we have a very interesting second half of the year. If you want to see more about what I write on the equity indices, please check out the guide. Good luck trading out there.